Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Tesla stock, Lucid stock, Rivian stock, and NIO stock. For Tesla, we're going to talk about how Tesla has recently implemented a hiring freeze and how they plan to have a new round of layoffs. On top of that, we're going to discuss the latest news updates regarding Elon Musk and his Twitter fiasco to where he is not going to be the CEO of Twitter any longer, and we're going to discuss how this is going to impact the overall share price of this company. As we close out the year of 2022 and what is going to become of their overall delivery sales in 2023 and how that is going to impact the TSLA share price. After that, we're going to move on and talk about why this analyst believes you should buy Rivian and Lucid shares over Tesla shares and why you should end up shorting Tesla to buy Rivian and Lucid stock instead. So I'm going to clearly disagree with him on this, but I at least want you to be aware of the other side of this overall debate. After we talk about Lucid and Rivian, we're going to move over and talk about NIO stock and how NIO has recently had a data leak in terms of the overall information of their customers. So these are all going to be electric vehicle news updates for today. So as usual, remember to go and comment down below your favorite companies if you want me to report on them and what you think of each of these stories. But without further ado, let's jump right into today's video. Tesla is currently trading at $125 per share, while professionals believe the company should be trading anywhere between $253 on the low end and $436 on the high end. The TSLA share price has been falling very drastically lately to where many investors believe this is a great buying opportunity considering the low share price of Tesla shares. Tesla recently told their employees that they plan to implement a hiring freeze, and they also confirmed another wave of layoffs that are going to come in the first quarter of 2023. Tesla has been growing very fast over the last few years, so clearly they've taken on a lot of new hires. However, this has led to many hiring inefficiencies within the company, which has then led to many layoffs due to the macroeconomic environment that we find ourselves in right now. However, as of right now, it's not clear on how long the hiring freeze will last for Tesla, and it's not going to be for all positions, because Tesla is still planning to expand in their overall manufacturing locations as we go into the future. So this is going to act as somewhat of a negative catalyst in the short term, but over the long term, this still looks like a phenomenal company to own. With that being said, why is Tesla discounting their vehicles as we close out 2022? Well, as of late, if you looked at the share price, the TSLA shares have dropped by around 8.83%, which means that over the last year or so, the company has lost around 70% of its value compared to some of its highs in the past year. It's fallen close to 2020 lows, so this is not looking good for this overall electric vehicle manufacturer. However, with that being said, as the share price falls, it lowers the overall premium on this company and makes it a better buying opportunity for long-term investors. Tesla shareholders also negatively responded to the EV automaker offering pretty substantial discounts on their various models. For instance, the Tesla Model 3 and the Tesla Model Y could come with a $7,500 discount between December of 2021 to December 31st of 2020. And on top of that, the company will also throw in free charging for up to 10,000 miles. So some investors don't think this is a good idea, but I personally think that it's fine. This isn't going to last for very long. It's only lasting 9 days until we start 2023, and then that's when these discounts officially end. So why not move more product through during the year of 2022 before we begin a new year where they're going to make new models anyway? Discounting is a common practice for various types of manufacturers, especially if new models are coming to the market. Discounting previous models is just the way the product lines go, and if we get any new launch dates for more advanced or up-to-date models, this is going to be able to push old product out of the way so new product can come to the forefront, which are clearly going to provide the company better margins over the long term. Many analysts and stock professionals are very critical about Tesla discounting their overall models for the remaining duration of 2022, but I actually think this is a good idea considering the weak demand that we're seeing in electric vehicles right now due to macroeconomic factors and conditions and the overall uncertainty in the overall stock market. If economic conditions continue to get worse, such as rising interest rates to get very high inflation under control, we can see products like cars, new cars, and electric vehicles come under scrutiny and the demand for these types of luxuries to go down. Therefore, offering discounts will allow Tesla to at least still move product during this time, even if the overall macroeconomic is unfriendly for electric vehicle manufacturers. In the end, the discounts don't align with shareholders' desires for the company to maximize their overall profits over the long term, but in the short term, I actually think this is a pretty good idea. On top of investors not being very excited about why Tesla has issued these various discounts on top of 10,000 miles of free charging, many investors are split on whether or not Elon Musk being the CEO of Twitter or now backing out of that position is a good idea. If you're not familiar with this news, Elon Musk is the CEO of Twitter after he bought them out, and he released a poll on Twitter, and it says, should he step down as Twitter's CEO? And he said he's going to abide by whatever the results are of the overall poll. And the majority of people actually said yes, he should step down as the CEO of Twitter, and this is going to allow him to focus more on Tesla and SpaceX, which I think is objectively better for all of these companies. So in the meantime, Elon Musk is going to find a good substitute to be the CEO of Twitter while he focuses on running Tesla and SpaceX. This will eventually lead to a higher TSLA share price because it's reinvigorating investors in their overall confidence in not only their leadership but also the company as a whole. Meanwhile, we have other analysts saying that you should short Tesla shares and buy Rivian and Lucid instead. Now, clearly, I disagree with this analyst on a multitude of things, but we're going to dive into his evidence for saying such a rash statement. So he says if you're shorting Tesla, you should be buying Rivian and Lucid. So Rivian is another electric vehicle company that is most known for their last mile delivery and cargo vans. Right now, the RIVN share price is trading at around $19.73, while price targets come in for this company between $23 and $70 over the next 12 months. Similarly, Lucid is like a mini Tesla, except clearly they are not as advanced in their overall manufacturing capacity. Right now, Lucid, ticker symbol LCID, is trading at around $6.89, while their price targets and price predictions range anywhere between $10 on the low end and $26 on the high end. This particular analyst likes Rivian a lot better than he does Lucid, and I tend to agree with him. At least in the short term, it seems that Rivian will outperform Lucid in the overall share price of their respected stock. However, with that being said, he says that he is confident that both of these companies are going to win significant market share as their production numbers increase over time, and he believes that these EV stocks will soar in their respected prices. He also does correctly highlight, in my view, that Lucid is backed by Saudi Arabia, and this is going to act as a very good safety net, which will prevent this company from fully going out of business. In the short term, I think the LCID share price of Lucid will fall below $5 per share, but clearly they're not going to go out of business because despite how much cash burn they have, the country of Saudi Arabia will keep this company afloat until they become a profitable company. Similarly, we have Rivian, who does a lot of business with Amazon, and Amazon isn't going to let their number one contractor go out of business, considering Amazon owns a large portion of Rivian. So again, Amazon and Saudi Arabia are going to act as very good safety nets for both Lucid and Rivian, which will prevent them from going out of business over the long term. But in the short term, the share prices could fall low enough to where they are a good buying opportunity. Now, despite if Rivian or Lucid are good buying opportunities, I don't think this justifies short selling or shorting Tesla stock. I just don't think you necessarily need to do that. If anything, you could probably be exposed to all of these companies without shorting any of them, because if you believe in the company for the long term, you might as well just invest into them, hold it for the long term, and not short any of them. But that's just my opinion. The author goes on and says that both of these companies are doing well right now, but Rivian is primed for overall growth, and he believes they're going to hit their overall finances out of the park in terms of their overall deliveries, margins, and revenue that they are set to bring in. Even as we enter 2023, if we increasingly see macroeconomic volatility, I think the majority of electric vehicle companies will fall during that time, or at least during the first half of 2023. So clearly we can get even better discounts on Tesla, Rivian, and Lucid, but this all comes down to your own risk tolerance and what you think of these companies and the research you have already done. Of all of these companies, I still think Tesla is the strongest, both technologically, and their manufacturing capacity can't be touched or rivaled by either Rivian or Lucid. But on top of that, Lucid recently released a prototype of their Lucid Sapphire, which is, as of right now, to my knowledge, is one of the fastest production vehicles that has just dethroned the Tesla Model S Plaid. But before we close out this video, let's talk about the latest news updates for NIO Stock, which is a Chinese electric EV company. NIO currently trades at $11.29, while price forecasts for this company over the next 12 months range anywhere between $11.25 to $50. Many investors believe this company is undervalued right now, but the reason why NIO is in the news today, ticker symbol NIO, is because recently the company is responding to concerns of a data breach. They've had their data leaked of their various customers, and overall people aren't happy about this very much. NIO was made aware of this, that third parties and other people who have hacked into NIO's network have been selling various people's information illegally. In response to this, to alleviate concerns, NIO ended up creating a hotline and an email address so customers can email them or call them so they can answer any questions about this and what that would entail. They even released a news release to notify everyone, which says, NIO deeply regrets this incident happened and is doing everything possible to support its users. NIO continues to work with governmental authorities to investigate the incident and implement necessary measures to contain potential damages. NIO reaffirms its commitment to protecting data security and privacy of its users. However, despite this pretty negative news in my opinion, investors seem not to care very much because NIO stock hasn't been that volatile lately according to this news. Despite something as catastrophic as a data leak, it doesn't seem that this has negatively impacted their share price as of right now. This could either mean that not many people are aware of it as of right now, or it means that honestly people just don't care that much and they believe that NIO will use this as an opportunity to further reinforce their data structure and capacity and their overall cybersecurity. So with that being said, I would love to hear your thoughts on Tesla stock, Lucid stock, NIO stock, as well as Rivian. Go and smash that like button for more electric vehicle stock news updates. Subscribe if you are new, and I will see you in the next YT video.